Double entry system. Learning outcomes. There are 4 learning outcomes to be achieved after finishing this topic. Double entry system or rules based on duality concept. Every transaction is recorded in the form of account. Each transaction must have at least a ledger account with a debit and credit. An account is a chronological record of the increases and decreases related to an item, whether the item is an asset, a liability, an owner, as equity and expenses, or a revenue. An account is found in the ledgers. An account is called a T account since it is shaped like a T. The T account. The T account is divided into 2 equal halves, and each half has separate columns for the date, particulars, folio, and amount. A 3-column ledger account. The double entry rule. Debits and credits. Increase in assets. Debit and decrease in assets. Credits. Increase in liabilities. Credit and decrease in liabilities. Debit. Double entry rule for capital and drawing. Increase in capital. Credit and decrease in capital. Debit. Increase in drawing. Debit and decrease in drawing. Credit. Double entry rule for revenues and expenses. Increase in revenues, credit, and decrease in revenues, debit. Increase in expenses, debit, and decrease in expenses, credit. Summary of double entry rules. The blue arrow indicates an increase while the red arrow indicates a decrease in each account. Relationship between accounting equation and the double entry system. The blue arrow indicates an increase while the red arrow indicates a decrease in each account. Rules of double entry. A summary. Example 1. Identify the transaction, its effect to the account and journaling the transaction. Then record in the ledger. Example 2. Identify the transaction, its effect to the account and journaling the transaction. Then record in the ledger.